Video is working fine over here. So let's start the session now. In this session particularly, we'll be covering the case study related to the foreign exchange pre-shipment credit and the post-shipment credit. So the case study is related to the foreign exchange over here. Let us go through it. Okay, so it says a garment exporter approaches XYZ bank for sanction of credit facilities with annual projected turnover of 1.5 crore rupees. The bank sanctions packing credit limit of rupees 75 lakh with 20% margin on FOB value and post shipment credit of rupees 75 lakh with margin of 10% on DP and 20% on DA bills over here. So what it actually means, it means, let us take the case that exporter E is over here who wants to basically export under the LC over here. In particular case, when LC is received by the exporter itself, and further if it presents the LC over there, then the bank can basically extend the pre-shipment credit to the exporter over here. Okay, and that amount is given to be what? That amount is given to be pre-shipment credit, that the packing credit limit that can be sanctioned, that is a PCL that can be sanctioned, is rupees 75 lakh with margin of 20% on the free on board value. So what is free on board value? The free on board value will not be basically considering, it will be related to the cost of the goods only and will not be covering the insurance and other charges over the board itself. Okay, and further the post shipment credit limit of rupees 75 lakh with margin of 10% on DP. So if it is documentary, if it is basically documentary payment is there, in that case, if it is site LC, in that case the margin would be 10% for the post shipment credit and further for 20% on the DA bills, means documentary acceptance bills. Okay, so actually you must be focusing right now related to the concepts of the letter of credit. We have already gone through the letter of credit concepts over there now. So what does it actually says? When the LC is received and further it is represented by the exporter to its bank, then in that case the bank will be sanctioning the packing credit limit over there. And further, when the exporter has shipped the goods, let us take the case, this is for purposes of, because pre-shipment credit is there. Pre-shipment credit is basically advanced to the exporter over here, so as to that he can basically procure the raw materials or whatsoever the expenses related to the manufacturing of the goods, so as to procure the goods, that is basically covered under the pre-shipment credit over there. Okay, once he has shipped the goods, and further has drawn the bills on the importer itself, in that particular case the pre-shipment credit will be converted into the post-shipment credit. It will be converted into the post-shipment credit over there. That is the case over here. So we have learned so far that in that case particularly the bank is basically sanctioning the pre-shipment credit amounting rupees 75 lakh rupees with margin of 20% on the free on board value. And further, then when it is converted into the post-shipment credit, in that case the amount allowed is again 75 lakh rupees. But if it is site basis LC, in that case it is basically limited to, the margin is limited to 10%. But if it is a DA bills, means if the bills have been drawn, in that case it would be 20%. So in case the bills are not drawn, it means what? The balance would be payable on the presentation of the document itself, that the documents will be presented and further the negotiating bank will be making the payment to the exporter itself. That is called what? That is called the DPLC. That is called the DPLC. That is a documentary payment, that you will just present the documents. On the site of the documents, the payment will be made by the negotiating bank. But in the case of the DALC, in that particular case, it is basically the documents are given on the acceptance of LC. So the exporter will be negotiating the documents and further it is called the acceptance LC itself. Okay, so the exporter receives an export LC of rupees 60,000 USD over here. Of 60,000 USD, the export LC, which LC, that is a letter of credit we are talking about over here, it is received by the exporter when the USD INR rate was 42 rupees per USD. When the LC was received at that particular scenario, the amount was for the USD was 42 rupees. And further, it is basically related to what value? It is related to CIF value, that is cost, insurance, freight value is given to be 60,000 USD, whereas we need to calculate the pre-shipment credit on the FOB value. You are getting this point now? So these are the Inco terms. So CF is basically related to cost, insurance, freight, all are covered over there. But in case of FOB, the cost of insurance and freight are not to be included. Okay, so that is the case over here. So on 12th of April 2011, when the USD INR rate was 42 rupees per USD, he approached the bank for releasing the packing credit limit. Okay, so have you basically learned so far that what is the question is all about over here? Up to this first paragraph, have you learned this so far? Okay, so the bank will be sanctioning this particular amounts and the margins are given, and further it is also provided to us that the exporter has received an export LC amounting USD 60,000 USD CIF value it is, and further when he basically approached the bank at that particular time, the USD price USD to INR rate was 42 rupees. In the second paragraph, it is said over here on 28th of June. On 28th of June 2011, the exporter submits the exports document to the bank over here. So what is the scenario over here? Let me explain this to you again. So let me tell you that over here we are having the exporter, and further let us take the case in another country or another territory, there is importer over there. Okay, now further there is an LC received, but it must be the case that the importer must have visited his bank, and further an LC is opened in the name of the exporter over here. An LC amounting 60,000 USD was received by the exporter over here, and he further approached the bank. Dated what? Dated 12th of April 2011, and further he asked that the bank must be releasing the packing credit limit. Okay, that is the scenario. Now he visited the bank XYZ over here. Okay, and further again he visited on 28th of June 2011. Let us assume over there that on the same date the PCL was released. Let us assume that on the same date the PCL was released to the exporter over here, and exporter shipped the goods. Now once he has shipped the goods, he must be having the bill of lading, the insurance cover, and all the related documents of the exports over there. He basically approached again the bank XYZ over here, dated 28th of June 2011, and further submitted the exports documents to the bank. And further he has drawn he basically submitted all the documents drawn on site for USD 56,000. So over here he basically, this LC is what LC? This LC is the site LC over here. Are you getting this point? And what amount he has basically the documents he has submitted to the bank? It is amounting 56,000 USDs. It is amounting 56,000 USD over here. Okay, and further the bank purchases the document. At rupees 41.15. At that particular time the documents were purchased at rupees 41.15, and when the post shipment credit is sanctioned, in that case the PCL is basically it is adjusted. Okay, so you can simply say that the PCL is basically adjusted out of the post shipment credit. So that is done over here, and credit balance further the exceeding balance was credited to the current account. The exceeding balance was credited to the current account over here. And further it says the credits of the balances to the current account of the exporter after recovering interest of the NTP. So the NTP interest was also recovered. Now let me tell you that first of all the pre-shipment credit is basically packing credit. We can say packing credit limit was sanctioned. First of all, first case was when the packing credit limit was sanctioned, and second case it will be when the packing credit limit will be converted into post shipment credit. And further at that particular scenario, when the packing credit limit was sanctioned, the whatsoever the interest that was charged for the PCL period, that will be subtracted, that will be deducted out of it. So we can say the PCL interest will be debited, and also the NTP interest period. The NTP is what? This is normal transit period. So normal transit period interest will also be deducted out of the post shipment credit, and the exceeding amount will be credited to the current account of the exporter over here. Are you getting this particular point? So first of all PCL, then PSC, and these component will be deducted out of it so as to achieve the final amount, and further that will be credited to the current account of the exporter over here. Okay, now further it says the documents are realized on 30th of July 2011. The documents were realized. What does it indicate? That the site LC was there, but the payment was made by the negotiating bank dated July 30th, 2011, after deduction of a foreign bank charges. And in that particular case, the foreign bank charges, the Nostro Bank in which the amount was credited, it basically debited its own charges USD 250 rupees at USD 250, and for the rest of the amount was settled. Now the bank charges interest for PCL at 8% for 180 days. So bank charges interest of on for PCL, that is a packing credit limit, it charges 8% up to 180 days, and further at ACNOS at 9% over 120 days up to 360 days. What does it indicate? It indicates that if the loan PCL is over there, if the PCL is outstanding for up to 180 days, in that case the bank will be charging 8% of the interest on the packing credit limit, but otherwise it will charge at the export credit not otherwise specified. At that particular case, in that particular case, 9% of the interest will be charged for 180 days to 360 days over there. And further, for the post shipment credit, the bank charges interest at 8%. In that particular case, the bank charges interest at 8% for the DP documents and for the DA documents up to 90 days. For both of these, whether it is a DALC or DPLC, it will be charging 8% for 90 days, and that is basically concessional rate of interest that is being charged, and ACNOs at 9% thereafter, and all the overdue bills at the 10%. And if it is ACNOs, in that case it will be charged, that is if the we can say the credit period is beyond 90 days and for the up to 270 days or 360 days, in that case it will be charged at the ACNOs rate. But if the bill is overdue, when does the bill becomes overdue? That you have presented the documents but the payment was not made between the NTP. Okay, in that case we will be saying what? We will be saying that the bill is overdue now. Are you getting this point now particularly? So this is a scenario over here, and further we will be solving the questions based upon it. I hope that you must have understood the question over here first of all, because that is quite important so as to understand the scenario over here, so as to get the answers of it. So now let us consider the first question. It says how much the bank can allow as packing credit to the exporter against the given export order. So how much the bank can allow as packing credit? Total amount sanctioned to the exporter is 75 lakh rupees for the PCL and 75 lakh rupees for the post shipment credit. And for this particular transaction, how much amount the bank can allow as packing credit to the exporter over here against the given order, considering profit margin of 10%, insurance and freight cost at 16%. I already told you that in the question itself, if you basically remember this particular point, over here we are provided with what value? Basically the bank sanctioned 75 lakh rupees with 20% margin on the FOB value. That is a margin that is to be maintained, and that particular margin is to be maintained on 20% is to be maintained on, that is a margin, let me mention it over here, and that is to be maintained on FOB value, that is a free on board value. But we are provided over here what? We are provided that the LC is basically 60,000 USDs. LC is amounting 60,000 USD, and that too at CIF, and that too at CIF. So we will be deducting what? We will be deducting the charges out of it. We will be deducting the charges out of it. So what charges these would be? So it is basically related to profit margin of 10%, and further the insurance and freight cost of 16%. These are to be deducted. So we can say 60,000 USD minus the 26%. 60,000 USDs and minus 26%. These particular charges are to be deducted in this particular case. These are the charges which are to be deducted in this particular case. So kindly please do let me know what would be the answer related to this particular question. What would be the answer related to this particular question? Kindly do answer at the earliest so that we could proceed. Question number 1 over here. So we will be deducting what? We will be deducting the 26% of the value out of it. We will be deducting the 26% of the value out of it. And when we will be deducting the 26% of the value, what would be the answer? It will be 60,000 minus 26%. That is basically related to what? That is 44,400 USD. And this is basically what value we have covered so far. This is a FOB value, because we were having the CIF value, and further we basically approach the FOB value, and further we need to basically consider a margin of 20% too. So that is also to be deducted. That is a margin that is to be over here, that is to be maintained over here by the bank. So it will be 44,400 minus 20% again, and it will be 35520. So this is the pre-shipment, this is the packing credit limit that will be sanctioned, that is 35520 USD. This is 35520 USD. And if we convert it into the INR, what amount it would be converted at? At what price it will be converted at? It will be converted at 42 rupees if I'm not wrong, because if you look at the question over here, when the packing credit limit was sanctioned, at that particular time the price is given to be USD to INR rate was given to be 42 rupees. So we will be multiplying 35520 with 42 rupees, multiply by 42 rupees, and the answer over here is 149 1840. So I'm just writing it over here, mentioning it over here. That is a packing credit limit that was sanctioned. It is 149, and for the 1840, that is the amount of the packing credit limit that was sanctioned over there. Now that depends totally upon the question. If the answers options are given over there in USDs or INR, in that particular case you must be looking at that particular factor. Okay, that is related to the first question. I hope that you must have all understood related to it. And further, now let's move to the next question. It says how much the bank can allow as post shipment credit to the exporter. Now we need to calculate the post shipment credit amount that will be sanctioned, that can be sanctioned by the bank to the exporter against the export documents submitted by the exporter. Now let's consider the paragraph related to the post shipment credit over here. When the documents were presented by the exporter, on 28th of June 2011, the exporter submitted the documents over there. Now we'll be considering that on 28th of the June 2011 itself, on 28th of the June 2011 itself, the bank will be doing what? The bank will be converting the pre-shipment credit, or we can say the packing credit limit, into the post-shipment credit. That is the first step. And further, let me tell you that what amount of the bills were drawn over there. What amount was mentioned over there? Not bills drawn. What amount was mentioned over there in the site LC? It was for 56,000 USD. It was a 56,000 USD of the amount of the LC that was basically drawn. That was basically drawn by the exporter over there. The bank purchases the documents at what price? The price over here is 41.15. And further, you need to consider this particular point over here, because this particular LC is what LC? This is the site LC over here. This is the site LC over here. In that particular case, we will be doing what? We will be having the margin of 10%. In the case of the documentary payments, we will be having what? We'll be having 10% of the margins over here. So over here 56,000 USDs, and further there will be 10% of the margin, if I'm not wrong. So kindly please do confirm me what would be the answer over here. The margin that is to be maintained over here is a 10%. The margin that is to be maintained over here is a 10%, and further the amount would be what? 56,000 minus the 10%, and that would be equal to 56,000 minus 10%, and that will be equal to 50400. 50400. This is a USD amount. And when the USD was sanctioned, the price of the document is given to be, the bank purchased the document at what price? The bank purchased the document at what price? The bank purchased the document at 41.15. So we'll be multiplying it with 41.15. So 50,400 multiplied by 41.15, and the answer comes out to be 2073960. 2073960. So I can write it over here that the post shipment credit over here, it is 207 and 3960. This is the amount which is basically over there. This is the amount which is over there as post shipment credit, as the post shipment credit. Is it clear? Now let's move to the another question. The third question over here, it says what type of the post shipment credit facility the bank can allow? What type of post shipment facility the bank can allow? What would be the answer related to it? So the options are FBP, FBD, FBN, advance bills. So FBP is related to what? It is related to the bill purchase, and further the FBD is related to bill discounting, and further FBN is related to foreign bill negotiated. In this case, let me tell you particularly, whensoever the LC is related to the site LC, or we can say DPLC, whenever it is related to DPLC or site LC, the documents are being purchased. It is basically said that the documents are purchased. Okay, and further when it is a case of the FBD, when it is related to discounting, it is in the case of the USANS LC. If there is a credit period mentioned over there, in that case it is the USANS LC, the FBD, that is bills are discounted, that the bills are discounted, and the negotiation is related to that the bank will be negotiating now. So what is the scenario over here? What is the scenario over here? Over here site LC is, in this case we are considering it site LC. So in this case option A is the right answer. That is bills are being purchased by the bank. The bills are being purchased by the bank over here. So it is FBP. So exporter will be shipping, and further the exporter will be submitting the documents with the bank XYZ over here, because any of the payments will be routed through the bank only. So the bank will be purchasing these documents, and further the bank will be presenting these documents to the importer so as to get the payment. So option A over here is the right answer, because it is related to what? It is related to the site LC. Option A is the right answer over here. Let's move to the next question. It says, when pre-shipment packing credit will be adjusted and converted to the post-shipment finance? On what particular date the pre-shipment credit will be adjusted and will be converted into the post-shipment finance? I already told you, when the documents are presented by the exporter to the bank over there, we will be basically considering that on that particular date itself, the pre-shipment credit will be converted to what? The pre-shipment credit will be converted to the post-shipment finance. It will be converted to the post-shipment finance. And on what date the documents were presented? On what date the documents were presented by the exporter itself? The documents were presented on 28th of June 2011. So question number 4 over here, the right answer is option B. Rahul Singh Rajput has given the right answer over here at the earliest. Option B is the right answer. Option B is the right answer. That is the 28th of June 2011. Next question, it says, for how many days the bank will charge concessional interest of 8% on DP bills at the time of purchase of the documents? For how many days the bank will charge the concessional interest of 8% on DP bills at the time of purchase of documents? What would be the right answer? Question number 5 over here. If you're considering question number 5 over here, what would be the right answer in this particular case? So what would be the right answer in this particular case? So whensoever we basically consider the case related to the, whensoever we basically consider the case related to what? Related to the post shipment credit, because it is related to when the documents are being purchased. When the documents are being purchased. Okay, so the documents were basically purchased by the bank dated 28th of June. The documents were purchased by the bank dated 28th of June, and further these documents were further realized dated what date? These documents were realized on what date? These were realized on 30th of July. These were realized on 30th of July. So what would be the right answer related to it? So here is a conceptual part related that you need to understand. It is a conceptual part related that you need to understand. Whenever it is a case of the USAIN's LC, in that particular case, we can say the documents, the concessional rate would be applicable for the period that is mentioned by the bank over here. In this particular case, that is mentioned to be 90 days. If I'm not wrong, the period that is mentioned over here in that particular case, let me tell you over here, bank charges interest PCL. Now consider related to the post shipment credit. It is mentioned over here. That is for 90 days, up to 90 days. But if it is a case of the site LC, when it is a case of the site LC, in that particular case, the concessional rate will be charged only and only for the NTP period. NTP is what? That is a normal transit period. NTP is what? NTP is normal transit period. So in the case of the site LC, the concessional rate will be charged for the NTP, that is a 25 days. In the foreign LCs, if the LC is drawn in foreign currency, it is 25 days. So the concessional rate over here will be charged for 25 days only. Do not basically consider when these are realized. We will not be charging based upon the realization. We will be charging the concessional rate as per the rules only. So it will be the 25 days. So question number 5 over here, the right answer is option B. Option B is the right answer. And Ashish Kumar Asthana has answered correctly over here. That is for 25 days the concessional rate will be charged. Question 6, it says, how many interest the bank will charge on packing credit advance? What is basically the packing credit? Packing credit is a pre-shipment credit. And what amount of the interest will be charged for the packing credit? So we need to tell how much percentage. First of all, we need to tell how much percentage of the interest will be charged for the packing credit over here. So what will be the amount related to interest rate that will be charged? So packing credit amount is what? It is 1491840 that I just mentioned over here. And further, let us now consider that the what rate of interest will be charged. Let us now consider that what rate of interest will be charged. First of all, let us have a look at the when the packing credit limit was availed. The packing credit limit was availed dated 12th of April. It was availed dated 12th of April, and further it is up to 28th of June 2011. It is up to 28th of June 2011. What would be the number of days in between? What would be the number of days in between? It will be 19 days for the April. It will be 19 days for the April, and for the May it will be 31 days. It will be 31 days for the May, and further it will be 27 days for the June itself. So how many days the interest will be charged for the packing credit limit? It will be 31 plus 19, that is equal to 50, plus 27 is equal to 77 days. It will be the 77 days for what we need to charge the interest. And further, if we look at the interest factor over here, it is clearly mentioned over here that the bank charges what interest rate? 8% up to 180 days. 8% up to 180 days. So in this case also, how much interest will be charged? It will be 8% of the interest will be charged, and further that will be charged for 77 days. That will be charged for the 77 days. So we'll be multiplying it with the 8% over here. That is 8 divided by 100 multiplied by 77 days divided by 365 days. Okay, so this is that we need to calculate. So it is 1491840 multiplied by 8%, and further multiplied by 77 divided by 365, that is 25177. So that would be the interest rate that will be charged. So I can let me mention over here, I'm just writing that interest that will be charged, it is 25177. I just mentioned it over here, 25177. So that would be the interest rate that will be charged, 25177. Is that clear? Now let's move to the next question. It says how much interest the bank will recover for normal transit period. How much interest the bank will recover for the normal transit period. I already told you that the NTP is 25 days. Normal transit period is 25 days. And further, in this particular case, what would be the interest rate that will be charged? So NTP, the amount will be charged, the interest will be charged on what amount? It will be charged on the post shipment credit. It will be charged for the post shipment credit. And what would the post shipment credit amount? It is 2073960, and it will be charged for 25 days divided by 365 days. And what would be the interest rate that would be applicable? What would be the interest rate that is applicable? Let me tell you that it was given over here in the question itself. For the post shipment credit by the bank, it is mentioned to be, for the post shipment credit is mentioned to be interest rate of 8%. Interest rate of 8%. So the 8% of the interest rate will be charged. Let me clear the space for you so that you can understand it well. So we will be multiplying it with the 8% over here. So it is 2073960 multiplied by 25 divided by 365 into 8%, that is 11364. So it will be 11364, that is the interest that will be charged for the NTP period. Let me write over here, this is a NTP interest that is charged, that is 11364. That is 11364, that is the interest rate that will be charged for the NTP period itself. Is that clear? Is that particular part clear over here? So that was related to what? That was related to question number 7. Now let's move to the another question. It says how much amount the bank will credit to the current account of the exporter on submission of the export documents. On submission of the export documents. Now when the export documents were submitted, what was the situation over there? We were actually have already sanctioned PCL to the exporter. That is to be adjusted, and whatsoever the interest is charged for the PCL, that is to be adjusted, and also will be adjusting the NTP interest rate for the post shipment credit. That will be adjusted upfront. At upfront it will be adjusted. Okay, so these have already been charged, and further this is yet to be charged, and that these are the three factors which will be adjusted over there. Okay, now what was the amount for the post shipment credit? It was 2073960, and out of it will be basically adjusting the PCL amount, that is 1491840, and further the PCL interest rate that we already calculated 25177, and further the post shipment credit NTP interest that is 11364, that is 11364. So these particular instruments will be adjusted. So the amount will be 2073960 minus 1491840 minus 25177 minus 11364. The answer comes out to be 545579. The answer comes out to be what? It comes out to be 545579. So kindly please do confirm if it is right or wrong. Kindly please do confirm if it is right or wrong. So these are the particulars, those are to be adjusted. 207. Let me just do the calculation again. I think there is some mistake I just made. So 1491840 minus 25177 minus 11364. So yes, that is actually right. So in current account we'll be crediting what amount? So in post shipment credit we'll be adding the amount of 545579 in the current account. Is that clear? Is that particular part clear over here? Okay. Now let's move to the next question. That is question number 9. Let's move to the next question. It says, what is the rate of interest applicable on the post shipment credit at the time of realization? What is the rate of interest that is applicable? So we need to answer that what would be the rate of interest that would be applicable on post shipment credit at the time of realization. Now when the documents were realized, these were realized on 30th of July. Okay, and further when the documents were submitted, the documents were basically purchased by the bank on 28th of June, and further let me write the date over here. So these were basically purchased dated 28th of June and further realized 30th of July. These were basically adjusted over there. Now what is the basically interest rate that will be charged over there? Now in that case particularly, let me tell you for that particular case we will be charging the overdue interest also, because after the NTP period the bill will become what? The bills will become overdue. In that case, what interest would be rate would be charged? The rate of interest that will be charged, it will be the 10% also. For the 25 days we will be charging at the concessional rate, that is for 28% over there, and for the overdue period, that is for 7 days, we'll be charging the 10 we'll be charging at 10%. Is that clear is it clear over here? So how many days are in there in between for which the interest is to be charged? From 28th of June to 30th of July. So for June it is 3 days, and further for July it is 29 days. So in total it would be what? In total there would be 32 days for which the interest is to be charged, and out of 32 days 25 days is the NTP period that we consider, and for the 7 days we'll be considering the overdue period. For the NTP period the concessional rate of 8% will be charged, and for 7 days the overdue rate will be charged, because we have basically overdue amount over here. So in that case particularly 10% of the interest will be charged. Okay, so in that case 10% of the interest will be charged. So NTP interest we have already calculated, it was 11364, and if we want to calculate for the 7-day period, it will be 7 divided by 365 multiplied by the post shipment credit, that is a 2073960, and further multiplied by 10% over here. So that would be the amount that will be charged for the overdue period. So we can say it is 7 divided by 365 multiplied by 2073960 multiplied by 10%. So that comes out to be 3977. So that would be the interest rate, that is a overdue interest rate. I'm just writing it over here. That is a overdue interest that is to be charged, that is 3977. So interest rate total that will be charged, what will be it? Total interest rate that will be charged 3977 plus 11364. That is the answer, 11364 plus 3977. It is 15341. That is the interest that will be charged. Is that clear? Is that particular part clear over here? Let's move to the next question. It says question number 10, how much interest will be recovered? So interest rate I told you, and the answer related to it, the interest amount we already covered. That is the sum of these two terms, that is 11364 and 3977. That is the interest that will be charged. Now let's move to the question number 11. It says on 30th of July 2011, when the export proceeds have been realized, on 30th of July 2011, when the export proceeds have been realized, what type of rate will be applied to credit to the current account of the exporter? What type of rate will be applied to credit the current account of the exporter? Now in that particular case, let me tell you, when the bills will be realized, when the bills will be realized, in that case, we need to tell what rate would be applicable, whether it would be the telegraphic transfer or the bills buying rate that will be applicable over there. Now let me tell you, that would be the scenario. Actually over here we are having the XYZ bank, and further we are having the exporter over here. Further we are having the exporter over here, and further we are having the XYZ bank in this particular case. Okay, now the XYZ bank through the correspondent bank in other country, let us take the name PQR bank, which is we are considering to be correspondent bank, where the bank is maintaining its nostro account, and further the bills are basically sent for presented to the importer over there, where the importer will be crediting, the importer's bank will be crediting the amount of the nostro account over here. Now in that particular case, when the bills when the documents are realized, in that particular case the amount is already credited. You need to consider one thing, that the amount of USD is already credited. It is already credited. And what was the amount? It was 56,000 USDs, if I'm not wrong. It is already credited. Now what is the scenario? The scenario is that exporter wants to sell these USDs. Exporter want to sell these USDs so as to convert them into INR, because he have already taken the loan now. So basically want to sell the USD. Now at what rate he would be able to sell these USDs? He will be able to sell these USDs at the buying rate, because he want to sell that and so sell those USDs, and he will be able to sell those USDs at the rate at which the market or the banks are ready to buy. So he will be selling the USDs at the buy rate. So what rate would be applicable? Because the USDs are already credited. In case the USDs are already credited, what rate is applicable? The telegraphic transfer rate is applicable. The telegraphic transfer rate is applicable, and it will be the TT buying rate. It will be the TT buy rate that will be applicable to this transaction. That will be applicable to this transaction over here. Okay. So question number 11 answer is TT buying rate would be applicable. Now let's move to the next question over here. It says on 30th of July 2011, when the export proceeds have been realized, how much will be the amount that will be credited to the current account of the exporter if the USD rate is 46.15/19? So the price rate over here is already provided, and further we need to tell that what amount will be credited to the account of the exporter over here. Now let me tell you that the amount was 56,000 USDs. It was 56,000 USDs, and if you're not, I'm not skipping the question over here. 250 were the foreign bank charges. 250 USDs were the foreign bank charges. These are to be deducted. So what is the amount we left with? It is 55750 USDs. It is 55750 USDs. That is basically we are left with. Now we will be basically converting these USDs into INR. At what rate? The price is given to be 46.15/19. So this is the buy rate and this is the selling rate. So what rate is applicable? The buying rate is applicable because it is a TT buying rate itself. So what rate it will be applicable? Because we want to sell, and we can sell this at the rate at which the market is ready to buy. So it is 46.15 rate that will be applicable. So it is 55750 multiplied by 46.15. That is equal to what? That is equal to, the amount is basically 257,286.2.5. So this is the rate, 257,286.2.50. So this is the amount that is basically over there. And what amount is to be adjusted? And over here the amount is also to be adjusted related to what? Related to the post shipment credit itself. Related to the post shipment credit itself. Now the post shipment credit amount will be adjusted over there. That is what amount? That is related to 2073960. That is amount related to post shipment credit. And for the NTP interest that was already debited, the NTP interest we charged over upfront, that is not to be debited again. Okay, but overdue interest rate amount will be charged. So it will be minus 3977. That particular interest rate amount is to be deducted. that particular amount is to be deducted over here. Is that clear? So it will be 2572862.5 minus 2073960 minus 3977. So that would be the rest of the amount that which will be credited. That would be the rest of the amount which will be credited. So it is a 494925.5. So that will be the amount that will be credited to the current account. 494925.5. That would be the amount that will be credited to the account over here. Is that clear? Thank you so much and see you again in the next video tomorrow.